I'm a general dentist based in Nevada. I graduated in 2022 and became a practice owner in 2024. I'm married and we just had a baby. I'm making $1 million at the practice and I'm able to save $30,000 a month. My question is, how do I get started with investing? The only big purchase we have coming up is a house. Everything at the practice is going well. Any advice on how to save and invest? How do I know if I'm doing the right thing?
Balling out. That's awesome. Two
Yeah,
years in and making $1 million
they're
and
killing it.
saving 30 grand a month and having a new baby. Life must be good. That's
I
good.
know.
That's cool. I
This
like
is a
hearing that.
good problem to
The
have.
success story. Yes. I love it when clients come to us with good problems to have because it's like, yeah,
Yes.
they're stressed. They're like, I don't know what to do. But it's like, well, we can figure it out. And these are good things. Like you have
Yeah.
more money to save than most people make, I mean, close to maybe the average salary of somebody in a year, if you will.
Right. Right.
So, anyways, that's a really good thing problem to
Yeah.
have. I guess, like, I like how the question I think was like, where do I start? And
Yeah.
I
Like,
love
what do I
that
do with
because, yeah,
$30,000 a month? That's a lot of money.
for sure. And it's like, well, I think it's smart to get it right from the
Yeah.
start because we talk to a lot of people that kind of like gradually like figure out what they want to do and it takes them a little longer. And I think
Right.
Ryan Isaac, I don't know if he specifically did this, but we've coined random acts of finance is like a
Yes.
term that we use a lot. And
Yes.
I think it's a great term because it's essentially just like I have so much money, I don't know what to do with it. I'm going to
Mm-hmm.
start doing random stuff. Is essentially
Yes.
like what happens when you don't have a financial plan, you don't have guidance, you don't have direction, you don't have a purpose, and you end up saying, I've got a bunch of money, let's start doing stuff. And that leads to whether it's like throwing more extra money at your mortgage or throwing money at some random private investment or like trying to pay off your student loans. That usually that's what we see being like the default when you don't have a plan or don't know how to invest your money, etc. You just start paying off debt. Well, you'll just start like
Yeah.
you have a brother-in-law pitch you on some crazy investment scheme that you'll be like, yeah, let's do it
Yeah. Yeah.
because it's easy, it's accessible, you don't have to really like think about much, and it seems like it's a good thing to do. What ends up
Right.
happening is, you kind of get a couple, maybe a year in or 2 years in, and it's just not the optimal path. It truly isn't. So,
Yeah, I guess with this ability to save so much, you are more likely to do random acts of finance because you can,
yes.
right? You have the ability. I mean, when you make that amount of money, it's like you can recover faster from mistakes, but your
Right.
mistakes could also be a lot more detrimental.
That's kind of what, like, for somebody in that situation, I would say, like, you're going to have to try pretty hard to mess this up.
Sure.
But, like, that's the consistency is like, can we just get something consistent, something
Yeah.
like building a nest egg towards something? And then you're going to have wiggle room to do extra stuff. Like, if you want to invest in private businesses or do real estate or those kind of things, like, I would say to go back, we haven't really answered the question yet. But so I would say to go back to, like, where do I start investing is
Yeah,
either
like what's the
do
order of operations here?
yeah, I would just start building liquidity, right? So that's the first
Mm,
step is make sure you have enough liquidity in your practice bank account and your personal bank account. Sounds like that wouldn't be too big of a problem for that person if they
yep.
have 38,000 extra a month. Then I would start setting up the right tax advantage accounts. Sounds like this person could really benefit from potentially like a K with maybe even profit sharing and things that could
Hmm.
help reduce taxable income so they pay less taxes in the highest tax paying years of their life and kick the tax can down the road for maybe a future year where they're not making as much money or take
Right.
advantage of the Roth bucket if that's something that we want to look at. So that's maybe step one is make sure you have like the 401k, you're doing the backdoor Roth IRAs and HSA, taking advantage of all those things. And then I'd
Yeah.
say like make sure you're hitting a certain savings rate above and beyond that. Cause so if you're making $1 million and you want to, that's gross income, maybe,
Hmm.
hopefully
Yep.
20% of that is like kind of the bare minimum. That's $200,000.
Yeah.
That's a lot of money, right? Like you do the math on that, 200 grand divided by 12 is basically 16,000 a month. So that's more than you can put into a qualified plan.
I was going to say, like,
Yep.
between all of those accounts you listed, 401k, HSA, backdoor Roth, that's what, like $100,000 maybe
Yeah,
that you could
maybe.
do
Yeah, if you're doing profit
between you
sharing
and
and stuff.
your
Yeah.
between you and your spouse potentially. So
Yep.
what do you do with the rest?
Yeah, and I think you just set up a consistent automatic brokerage account draft. That builds more liquidity and it's invested
Yeah.
in the stock market. But the way I look at that is like a nest egg for the future,
Hmm.
right? Like this is a bucket of money that if you need to access, it's liquid, you can. But it's like, I don't touch this till I'm in retirement money. Also, like that's where your mind should be.
Yeah.
And then it's just building. I always explain it as like the quicker you can get having a bigger chunk in that account, it's like a snowball rolling down a mountain. right? As the snowball goes down, it accumulates more snow and it gets bigger and bigger. So the faster you can fund investments or get, have a larger investment balance, which this person would be able to, accelerate that pretty quickly.
Totally.
If you're truly saving $30,000 a month and you didn't decide to do any of the extra stuff like paying down extra debt or private investments or private businesses, you could save $360,000 a year. It's a 36% savings rate. That's stellar, right? Like that in and of itself will get you to early retirement if you just keep your head down and do that. So
yeah, that's helpful. And one thing to clarify, when you say liquidity between business and personal, what are some good benchmarks for that?
Yeah, just like an emergency fund of personal money. I mean, you have a lot of risk that if you get injured, if you're the sole breadwinner and you get injured or something goes really poorly or something happens in your life that just totally uproots your life, you have a lot of risk that you are going, maybe your spending is creeped up because you're making so much money. You just need to have a buffer, right? So whether that's in your personal life or your practice life, I'd say you need it in both. So maybe 3 to 6, probably 6 months worth of personal spending in your personal life and a month, maybe 2 months, somewhere around there in between there in your practice of overhead. So if you spend, let's say $75,000 of overhead every month, then it would need to be 150 grand in your business bank account as like the minimum.
Right. Okay.
I don't think you can go wrong by having a good chunk of liquidity. There is a line though where we have to draw the line where you can have too much liquidity, and that's
cash drag.
Right, exactly. Yeah. And so you're just losing money to inflation. And so that's another problem I see with people who have these big savings rates where they're like, we can save a bunch of money. Usually we end up just seeing lack of a plan leads to either random acts of finance or B, just piling up a ton of cash.
Right? Yeah, I see that a lot.
So and not either one of those is not like the worst things in the world. It's just we can optimize and you're going to be way better off. So hire a financial advisor. Don't hire a financial advisor. Get good advice on how to set an automatic savings rate and figure out what accounts it needs to go into. Probably start with the tax advantage accounts, then feed into the the kind of after tax account after that. And make it automatic. Take the guesswork out of it. Take the emotions out of it. Just say, I'm investing $30,000 a month into these specific accounts, and it's going to go and be a snowball rolling down a hill.
Yeah, totally. I think that was good. That was a lot in that one.
Good.
You killed